All right, should be live now. Good afternoon, everyone. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is a SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether your trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure, and nothing new from position disclosures for me. Still no new swings, as we had a pretty difficult trading day, in my opinion. So let's talk about it. So, coming to the market this morning, yesterday Powell totally destroyed us because, well, inflation is destroying us and he needs to destroy inflation. So, I guess not totally destroyed us, but we got wrecked pretty hard yesterday. Lost that key 384, which was 3850 in the S&P after trading back and forth through it a couple times throughout the whole 2 o'clock to the close rate decision and then press conference and then Q&A. But ultimately lost that level, lost 3,800, closed below 3,800, and downside continuation was looking likely. We ended up trading down pretty immediately, like literally starting with SPY at 4:01 after hours, and traded down decently early on in the night. And by the time the morning came around and we were waking up, we actually bounced decently from those overnight lows. So we did get some downside continuation, and coming into today we were pretty flat, actually very very slightly green. I guess just look at the pre-market action here. We're way up here at the open, fairly green. We actually hit 380 pretty early on there, and then sort of got weaker pre-market. I guess into the close we really got weaker. So we were set for, so coming into this morning, what I was saying was this open reminds me of last Friday, pretty identically, where we're extended to the downside, but we're not extended really to the downside to the point where I feel safe coming in to buy, and if we go lower, I feel like that's an opportunity and I can buy more because we're so extended that we're like really due for a bounce soon. Even if we go lower first, we're definitely bouncing sooner than later. Whether it's today, this afternoon, or even maybe tomorrow or something like that. And I'll go over that in a second. That's definitely something I want to talk about here. But just not extended enough to feel safe to buy yet, but definitely extended, a possible that we can bounce just because we are extended. But everything's looking bearish. We probably shouldn't bounce too hard, but it might be hard to get real downside continuation after this. And that's pretty much what we saw today. And, just looking at the action, sorry, I just realized that my chart wasn't even blown up there. Looking at the action today, we opened, traded down without any, it was very orderly all day, traded down in an orderly way without any panic, any bounce, anything. And then just this 375 was like it was basically 374, 375, 376 all day, with 375 being like the real inflection point. Just grinded this out, bounced 376, mid 376 or so, failed back down, and that was it all day. Just terrible, terrible price action all day. Which, looking at last Friday, this was last Friday, and look at the chart pattern. Same thing where it's hard to kind of look for, not hard to short in a very small time frame, but hard to look for like a real big down day today, but not quite safe enough where I feel like I can come in and buy without an out and be ready to buy lower if I need to. And then look at this action, like literally the same exact thing off the open. Comes down, bounces, and then just pretty much nothing all day, except for a rally into the close, which we almost saw the exact same thing. 10, 15 minutes into the close, we had a green hammer on the daily chart. This candle pretty much looked like this candle here. And then the last 10 minutes, I don't know, MOCs were light to buy before 350. 350 is when NASDAQ comes on for the MOC. And flipped to the sell side. I don't know if that was the reason why we sold off so hard, but came back down. So a pretty bad close, but a fairly small day, and the intraday action was pretty brutal. So what to look for next? So we'll see. Let's talk about extension. So we'll see if we see downside. This is parabolic to the downside here. It's going to, we always come back to equilibrium. We're going to go back to equilibrium. The question is, do we get crazy downside extension, which that's kind of what I'm hoping for, or do we see what happened after that Friday that I just compared us to today, and do we go sideways for 3 days? Hopefully not. That'd be very annoying. But so what to look for next? So one, just going into tomorrow, it's interesting to point out, we've talked about Niners, the DeMarc indicator. Tomorrow is going to be a Niner on the downside. That doesn't mean it's an automatic buy. You can get a couple more days before you get a nice bounce. But today was an 8. If we go down tomorrow, it's going to be a 9. So that just helps, just like a little layer of probability that this selling might be exhausted and we could be due for a bounce back to like 3,900, or, we'll see. This is parabolic to the downside. We'll see how crazy this can get. It depends if the VIX can really spike or not for that extension. But so let's talk about extension. So we are roughly $10 extended from the ADMA, right? That's what I'm talking about when I'm talking about extension here. I talked a little bit about it this afternoon, but let's just go back and do some chart history. Let's look at pretty much every single, which we've done pretty good with these bounces throughout the year. Well, let's look at every single time we finally bounced. So this low was 420. That day, your daily ADMA is up at 450, $30 of extension, 25, let's call it $25 of extension. That's a lot, right? 410, call it 410, 411. Your daily ADMAs, call it 435, roughly $23 to $25 of extension. So 25-ish, 23-ish. Let's look even over here at this mini one-day bounce. Call it 420. Your daily ADMA is 435, so a solid 15. Let's look at this one. Low is 405. Daily ADMA is 422. Call that 17. What is this? 385. Call it 405, 403. Call it 15 to 20. This was the year low. You could even look at this, right? Because we actually did bounce here. Even if this bounce failed, let's look at this. 370. Call it 390-ish. A little over 20 there. This was the year low. 362. 380. So what's that, like 18 or so? And then our last one, which was 390. This was the last one that we did. 390, roughly 405-ish, so 15. So at literally every single, and this doesn't mean we need to be this extended to bounce. We can do what we did, we can round up and base up. Like we can go sideways and then, we could have broken up back here, right? Like the Fed could have saved us and broken up back here, kind of what we did over here. It's not like we need to be this extended to go down, but that's what I mean when I'm talking about last Friday and today, where I'm saying, like, it doesn't feel quite extreme enough for me to buy in an aggressive way, but it's following a big day down. So are you really going to get like another huge day down? Maybe not. But now that we've had this sort of bearish time correction day, if you kind of just look at it in this sense, where like, pretend this isn't 2 separate days, but this is just the price action. I mean, it's just like a giant bear flag, right? Like, look at that hourly chart. Look at the 30-minute chart, just kind of like a big bear flag. So we'll see if we get downside extension tomorrow. If tomorrow we are getting downside extension and it's, it's a 9er on the daily, our ADMA is roughly 385. Every single time we've bounced an extension this year, which have been, we've been pretty good with that, it's been 15 plus. So we would need 370 and under. So I'm not saying we're going under 370 tomorrow, but if we were to go under 370 tomorrow, I would probably look to be buying some stocks without an out and be ready to give that room lower to buy even more. So that's exciting, right? I mean, things look pretty bad, but that's exciting. A possible buy setup coming in, I think. In terms of whether we break the year lows or not, I don't. It looks like we could. I don't know if we're going to, but all I know is 15, 20 plus dollars of extension is that it's a lot. It's enough to really come in here. This is bad, but this isn't. COVID was the most extreme thing ever, and this isn't COVID, right? It's not even '08, and it's not gonna. I don't think it's gonna be like '08, but I don't know. We'll see. That's bigger stuff to worry about down the road. But for now, so I think that's what to look for tomorrow. Let's see if we get downside continuation. If we don't get downside continuation, it'll be tricky. I mean, I don't know. I don't see why we would gap up in a big way. If we gap up in a big way, I don't know. I mean, probably we'll just have to use today's range as 375, 374, 376, maybe even 377 or so. But anywhere in here tomorrow is going to be tricky and annoying. I would really... It looks like we could, get another flush. Like, I don't know. Well, that's kind of what I'm hoping for. But if they do this, that'll be tricky. We'll just have to use those key levels. So I think like this day, we talked about 384, 385. I think this was the 384 day which actually it was. We had said look for buying SPY back through 384. So that'd be like 375 today. If we're gapping down a bit tomorrow, but not enough, and we don't really get under 370, look for back above 375 or 376. But other than that, yeah, I think that's all I really got to talk about, at least for the market and kind of what I'm looking for next, which is hopefully further extension. I want this to get worse before it gets better. And I really don't want to go sideways, but we'll work with what the market gives us. And then in terms of trades today, I don't think any of the longs were too good. We had a couple shorts that I was looking at. I basically said to look for the leaders to come down. If this market, if the market's going to hold up, then the market's going to bounce, keep going with your leaders. But if the market's going to actually have another leg down and go towards year lows, everything's going to come down with it. So this Apple's going to have to come down. Specifically, Tesla and Netflix have been the two leaders that we've been discussing, which Netflix actually is still in that category. Still not a bad day there. Yeah, not too bad for Netflix. But basically, we said this 230... What was it? Where did we open today? I think it was 235, which that was, some people were asking from the Fed yesterday about where do you stop out, and this like 230, yeah, it's 236 actually. It's 235 to 236. So just as a leader, if the market comes down, anyone that's been going with that relative strength category is probably going to have to stop themselves out, adds fuel to the fire a little bit. So we were watching Netflix as a short, back below that 236, 235 level, which looks like it chopped it a little bit and then flushed it. And then Tesla 300, just a very, very obvious level, which this lost 300 pretty early and was a relatively weak stock today. So that relative strength category is kind of out the door there. And now this chart is very messy. Tesla's got to get back above 290 for bulls to at least somewhat start to like it again. But yeah, I think that's all I really got to talk about. So, I mean, I don't know. We'll see if they can really flush this market out. Whether year lows breaks or not, I don't know. It's more like if we're at 365 tomorrow and we're $20 extended, I don't care if the year low is going to break or not. I would be thinking we are $20 extended. Like how you think about extension is it's extreme moves one way or to the other. So that's where you try to get your intervals. If you're looking at a daily chart, your intervals have to be bigger than a 5 minute chart. But if you're looking at a 5 minute chart and something goes down for, $5 in a row, you start to think, all right, this bounces in points. $5 straight down. The next dollar is probably going to be up, not down. And if the next dollar is down, I'll still go with it. Given that everything else is normal and it's just kind of extension. It's not based on like single stock fundamental news or anything. But so with a daily chart, the $15 to $20 plus extension that I'm talking about, that's when I'm not thinking a point. I'm thinking like 5 points, 5 to 10 points. So SPY is extended by $20 to the downside. The next 5 points are probably up, not down. And but I'm ready for another 10 to 15 down. Because you always gotta, if you're buying extreme things, so you always gotta be ready for the most extreme scenarios. So just because SPY can get $20 extended doesn't mean it can't get $25, $30 extended. It's possible. But you don't want to, be stopping out there. That's an opportunity because that's going to be a sick snapback. But so if we are, under 370 tomorrow and we're $15 plus extended, we're $20 extended. At that time, I don't care if the year low is going to break because I'm thinking if we're at 365, we're going to retest this 370 at least. So I would be buying, ready to buy 365, ready to buy more 360. If the year low holds, great. If the year low doesn't hold, fine. I expect it to bounce back up because this extension is going to correct itself at some point. But that is different than in 2 weeks from now where chop in 370, these moving averages are all the way down here and we're not extended to the downside. That's much different. That's when I'd be thinking, that under 350 buy, which I was showing you guys this trend line. I very much like downward trend lines for going on the opposite direction. So I guess for a top, I guess they work good for tops too. But as opposed to drawing a trend line like this for an uptrend, for really catching bottoms, I just find that these work pretty well. This has been pretty good so far this year. So just going with this bottoming out trend line, that next buy comes around 3,400 for S&P. And those are all my thoughts that I have. So that's really what I'm thinking about. I'm thinking about all those things. We'll see what the VIX ends up doing as well. Is the VIX gonna go? If the VIX goes to 50, you're probably gonna see SPX at 3,400, and it's probably gonna be a pretty good buy. But if the VIX just does one of these, rallies, can't really explode though, back down, bear market rally. Rallies can't really explode, back down, bear market rally. Now we're back up. Can it explode? If not, bear market rally. That's the other thing to watch too. Definitely watch the VIX. And that's all I got to talk about. So happy to answer any questions, take a look at anything you guys are looking at. Chinggis on the trades that are setting up good after getting triggered into the trade. The price trades back down, giving a second opportunity to enter the trade when it should not. Giving a second opportunity to enter the trade when it should not if the trade would work. Would that be a legitimate reason to close the trade for a small loss without waiting for a stop loss to trigger? What is the probability of it working out after price trading back down below the entry level? Does it decrease the probability of success compared to... Does it decrease the probability of success comparing to the price not trading back down? I think I get the gist of your question. I feel like, correct me if I'm wrong, but are you asking if you buy like through a level and the trade doesn't stop you out, but it doesn't go right away either, is it okay to stop yourself out if like time goes by and it doesn't go. Is that kind of what you're asking? On the days when the market is going sideways, I struggle to take trades in other names. Let me know if that's what you're asking, Chinggis. Or I don't know if this is a follow-up. On the days when the market is going sideways, I struggle to take trades in other names and play or otherwise. Well, let me know what you meant by your first question, if you could. Just confirm yes or no if that's what you mean, like buying through a level and it doesn't go right away. On the second question, it's really, I mean, volume's pretty important for like identifying good relative strength and relative weakness. Just how the 5 minute chart looks and how the 5 minute chart is trending compared to what the market's doing. So, I guess looking at like this is what SPY is doing this morning. This is what CRM's doing. So in the first half hour to hour, CRM is trending up above its moving averages that are pointing up. SPY is somewhat trending down above its, below its moving averages that are trending down. So CRM, if CRM goes through the level, if the market can break up, which CRM went through the level for real, even though it rolled back over at 1035, and SPY at 1035 didn't even really do anything. But sometimes it doesn't matter, and sometimes it does matter. That's probably why it worked, but ended up failing because of the market, but it still somewhat worked. I think a couple of you guys caught this, made a little bit of cash for yourself, even though I'm sure you got stopped out on the rest of your position. If you were disciplined, that's what you should have done. But so just looking at the chart, right? Like even though this has failed 152 twice, I mean, the more it fails, if something fails, it should reverse, right? So this fails at the level, but it doesn't break the low of the day. This fails at the level, but it doesn't really break this 5 minute chart trend. You get this one tail, but this tail's back up here. So here we were still watching it. You should still be watching it because it's building out in front of the level. And you got to think about like what is going on when, like this is how I think about it when I'm watching the tape and watching markets anyways, like what is going on when charts are doing what they're doing. So for example here, what is going on when this name is trending up and failing at this level but not reversing and keeps going back and keeps going back. You're getting strong buyers into strong sellers, but the buyers are greater than the sellers ultimately. That's why they're stepping up. They have to step up. That's what makes the bids step up. They try to get filled, and when they can't get filled anymore, they got to step up because they need to buy more, and they don't want to, they need to buy more at the best price they can. So they're trying to get filled, can't get filled anymore. They got to step up. They got to step up. They got to step up. And then eventually they're either going to need to keep stepping up because they need to buy more, or they're going to buy what they need to buy and then they're going to be done buying. And if there's literally more buyers than sellers, then you get a nice breakout because those buyers need to buy more than whatever the seller has to sell, and vice versa. That's when you get breakout failures, when the buyers bought what they need to buy, and the sellers, whoever's like the big seller here, still has more to sell. So maybe they break it but then cross it back down. That just like helps with liquidity and average pricing as well. And then if again, if the buyers spend all day buying, and then they get to buy for 15 minutes straight, and you consolidate, and then in that consolidation, aka a battle between buyers and sellers, the buyer that needs to buy is just doing his buying, and then if he buys enough of what he needs to buy and he's done buying and that seller didn't clear out, you're going to fail. And if the seller does clear out and the buyer's not done buying, you get a breakout. Like that's literally what's going on. Or that's like how I think about it anyway. So hope that kind of helps, Chinggis. And kind of like answer, if your first question was what I think you were asking, my answer would be to not ever just stop yourself out because something's working. Always let it stop you out. Because if it's not, because exactly what I just said is what's going on when it's if it's not working right away, but it's not failing either. It's just a fight between buyers and sellers. So if you bought, you're clearly anticipating that buyers have more buying to do, and therefore the price of the stock is going to get driven up. So don't take yourself out just because it's taking too long, because it's not failing either. The buyers are still buying. Let it stop yourself out. So hope that helps. Don't really know what happened in the last 10 minutes. MOCs flipped to the sell side, not in like a huge way, but yeah, I don't know. Just seller, big money sold at the close. Sure. So Tell had bad news 2 days ago that they pulled a notes offering. Tell needs to raise money to get this like driftwood project that they're doing done, and I've been looking for them to pretty much get financing secured on that by the end of the year or so. They've been doing pretty well with that, and they've been raising money. And every time they've done an offering, the stock's getting bought back up. But they pulled this. So what that means is, like, I don't think this company's like screwed or anything, but it's just probably gonna take a lot more time than I was looking for them to raise enough money to be able to get the project done. So part of me thinks I should just sell. This is around where my average price is, so I've pretty much given back my profit in it. But I was looking, I know what my risk reward was in this, so it sucks, but it's part of the game plan. Um, you know, so so my thought process now, and I've been like thinking about it. On the one hand, I probably should just give this to whatever yesterday's low or something and stop myself out. When I think about that, I think I should probably at least give it real room. And then when I think about that, I think I should probably give it to $2, because it's not that expensive of a stock, even fundamentally. Without this deal, this that like project is what can send them to 10 plus. So even without this, I don't think it's an expensive stock or a worthless company. Like, it is a real company. Um, and I do really still like the Nat Gas play. The Nat Gas play at this point probably arguably has better risk reward than the oil play. Everyone thinks it's going to be a cold winter, right? And the whole Europe energy thing isn't great. So I want a Nat Gas name. I guess I could look at like AR or something cleaner. But it's cheap enough where like I could just it's gonna, if it goes back to under 270, I'm gonna start to be out of the money again. But if I could give this, then I just look at like I don't know, I could just trade around a core in this, and so what if it takes more time? I could trade around a core and make cash flow, because that's something that's good in this market, making cash flow. AKA, I want to do that in like dividend names too. I was trying to do that for a while, and then just kind of lightened up exposure in general. But for a while, I was doing that in some dividend names too. Um, so my thoughts on Tell are, I'm still thinking about it, but on the one hand, in a technically trading responsible manner, I should probably stop myself out of this at 280. In a bit more of a swing technical perspective trading manner, I should give this to $2.25. And in a bigger picture fundamental perspective, I should probably give this to, I don't know, maybe like a buck 50 and just trade around a core, because it's really not that expensive. It's not going to affect my P&L all that much. Um, so Yeah, so those are my thoughts on it. Sorry, it's not like a better answer, but I'm still, yeah, it has a high short float. I like that as well. So I don't know, like I don't. My thoughts are, I guess to summarize it, my thoughts are that the news is bad, and if you were looking for this deal or this project to really start to get underway before year end, it's probably not going to happen. So I don't like that, but I also, I don't want to be totally flat names, and I never really want to be totally flat. So those are my thoughts. So the news is bad. Short term, it's not good, but longer term, I don't think it's bad still. So I'll obviously tell you guys if I get out of it, and I'll tell you guys if I start to buy more of it. I probably won't buy more. If I do stay in it, I'll probably start buying more around 250 and under 250. But I'll definitely let you guys know. I'm still thinking about it and still also researching it as well. I've just been trying to do a little bit of research on it every day. Um, so yeah, so those are my thoughts on it, and I'll let you guys know when things change. But short term, the news is bad. Don't get me wrong; it's not good news. But it's still bigger picture, longer term. I still like it. I guess those are the overall thoughts. And then yeah, sure, Pin. So Pin's been looking for the buyout. There's a lot of chatter on it now. Or maybe I wasn't really looking for the buyout specifically, but just the Pins is. I really like it fundamentally, and I've been in it since like last spring at this point. So I have a really good price on it. Because I did what I did with Tell, even though I gave back all my profit in Tell, but traded around a core and took some pain for like a month or two, and then finally am like in the money with it now. But wasn't necessarily looking specifically for a buyout, just buyout or like a merger or something. Fundamentally, it's just very cheap compared to a lot of peers, compared to pretty much anything, whether you're looking at Snapchat or social media in general, like a Twitter or something. I really like it. It basically makes two times the free cash flow that Snap does at like a third of the value, like something like that. I'm sure that's changed a little bit since the stock of Pins has gone up and Snap hasn't done too much. Um, but yeah, so if you think Pins, basically, if you think Pins isn't undervalued and you think it's fairly valued, you should probably think Snap belongs at like sub $6. So my thoughts on it now are still I really like it, and there is a lot of chatter on it, and I don't think it's unrealistic for Google to buy them. I don't like how much chatter is getting brought up about it now, because it's like one of those things where once everyone starts to talk about it, it doesn't happen. That's like pretty much always how it goes with the markets. So my thoughts now, my price target's been 35 roughly. I would sell it above 30. Price target's roughly 35. And that's not technically based. It's more fundamental. I do think it could go even higher than that. Um, Technically speaking, now it just becomes a matter of how much am I willing to give this back for that reward. So like let's say at 23, I think $10 is my reward. I don't know. I mean, this shouldn't lose 22. 22 is a really big level. I really would not want to see this lose 22. So now I'm not sure if I should stop myself out for profit at 22, stop myself out for still some profit, but annoyingly probably giving too much profit back at 20, or do I really go for it and just keep holding it no matter what? I'm also not too sure there, because if this goes, now I'm just like literally thinking out loud, if this goes under 22, it's probably going to do it because this market is somewhat crashing and possibly going below year lows. But below year lows is probably where I want to do some buying. So I don't know if I want to be stopping myself out of names in a place where I want to be doing some buying for the market. So again, thoughts on Pins are I like it a lot still. It still looks fundamentally good. It still looks technically good. technically speaking, I don't want to see this under 22, and I'll certainly let you guys know if I get out of it under 22. VIX red today, for what it's worth. Oh yeah, how did so VIX, red, yep. We didn't really do anything today though, and then VVIX red as well. Yeah, I don't know, so not much there from either of them. Interesting. Not really much of a signal, I don't know. We'll see. Thoughts on AMD continuing to fall? Where do you see a bottom? Yep, so AMD finally made new lows on the year as well. Another one bites the dust. So 60 is a gigantic level, and then 50 is also a gigantic level, and then 40 is a gigantic level. But it's getting to these semis are market leaders, so they are leading to the downside, but they may bottom first. The market, I don't want to talk about this too much because I've been talking a lot this afternoon, but I think the market is going to bottom, and this is when the market bottomed in, when was it, July? No, June. The market is going to bottom whenever we like really fully price in and truly feel like whatever the worst of the worst is going to happen, whenever we like feel like that. So in June, I remember saying this, and I didn't do a great job of buying for a bigger picture here, but I remember like the Wall Street Journal had like front page news about recession coming, and we were saying the market is going to bottom when we fully price a recession in. The market is a forward-looking mechanism, so we're pricing in, it prices in the future. So the market's going to bottom when we fully price in the worst of the worst, which it seems to be, like, as time goes on, looking worse and worse. So that's why we're kind of having these, bigger sell-offs keep coming back, because the bigger picture keeps kind of looking worse and worse. But it's very possible, and I think honestly highly probable, that this market will put a real bottom in much before we actually have the recession. And not only that, but the market will probably be trending up when the recession actually happens, because at that point the market will be forward looking for the recession to bottom and get over and finally be done with or whatever. So that's what to look for as well for a market bottom, is like full priced fear, and the VIX is a gauge for that, and the VIX hasn't really done it in an extreme manner. 35 is not bad, but 45 to 50 plus is better. So that being said, for the market, AMD, I don't know where it bottoms. I do know 60 is a big level, and I do know 50 is a big level. And these names have been expensive. AMD, NVIDIA are expensive names, but they've certainly gotten a lot cheaper. And two names I think I want to really swing are just like SMH and QQQ, and I might want to also do some via TQQQ and Soxel. So I've been thinking and saying Soxel under 10 is where I want to do a first tier buy. That doesn't mean $9.99 necessarily. Maybe mid-9s, maybe 9. Definitely $8.50. I would definitely do a first tier buy for sure. So where does it bottom? I don't know. How is it going to bottom? It's going to bottom pretty much one in two ways, which is the only way stocks can bottom. It's either going to capitulate with extreme extension, and you're going to look to buy it, hopefully lining up with a level, but more so just because of the extension. So do some homework, do some research, and look at how extended AMD usually is when it bottoms, like it did these other times. I'm not going to go through that right now. But it's going to bottom either because of extension and capitulation, or it's going to find a floor and base out over time and then round back up and go back up. So that's, those are like two things what to look for. It's going to bottom probably with the market. It might bottom, semis might lead a bit and bottom before the market bottoms. But just look for extension. So like if the market is under 370 tomorrow, AMD under 65 into 60 would be great. Like I think you could probably buy AMD under 65 and give yourself room to buy more at 60, because that would be some pretty crazy extension. So does AMD bottom literally tomorrow? I don't know, maybe. But that's what to look for, either extreme extension or for it to find a level and base out. But right now there is no level until 60. So if it doesn't go to 60, maybe it bottoms and bases out around 65 or a couple days or so. I don't know. But 60 is your next level there. And again, watch your extension. Yeah, Nick P. I'm thinking about doing that too. We'll see. They traded okay yesterday. That traded pretty well with the market, so keep watching it for now. Any other questions, or are we good? Today kind of sucked, so we'll see. But again, no other questions. Doesn't really look like any. And I assume a YouTube question would be posted for me since one already was. So we'll see how we gap tomorrow, and we'll see where we are. SPY, we don't usually bottom on Fridays, blah, blah, blah. I don't think those older terms or whatever matter as much anymore because computers run things now. But we'll see. I would be very excited to buy things if SPY was under 370 tomorrow. I would definitely buy things if SPY was 365 tomorrow. I'm not trying to say we are going to crash or anything. I'm just literally using math of $15 to $20 an extension is where we have had every single extension bounce in the market for this entire year of 2022. And I'm sure that proves, well, I guess it's different because the market's more expensive than it used to be. But yeah, that's the threshold. So if we don't get extended that much, I don't know, might be tricky again tomorrow. But if we're not that extended, 375, 374, 376, today's range, we have those levels to play with. And yeah, we'll see how they gap us and go from there. So have a good night, everybody. We will see you tomorrow morning.